Hi, I'm Jim Gosart with Republicans Overseas.
And I'm John Richardson, working with Republicans overseas.
John, the new tax proposals that have been announced by the Harris campaign include a new tax, a tax allegedly for the super wealthy, but a new tax nevertheless on unrealized gains, essentially a tax on accumulated savings. John, it seems like this is yet another tax that potentially can hit Americans abroad uh, in a way that is not anticipated, I'm sure, by those who are crafting this tax legislation. But what's your take on it?
Well, of course, my take is that your description of that is correct, but why focus just on Americans abroad for the moment? I mean, this is part of a general shift in how policymakers in the U.S. think about taxation. And the shift is going from a presumption of taxing only realized gains to what I would call the creation of fake income, right? That is by deeming increases in value to be taxable gains, even when nothing has been received. And we see all kinds of instances of this, but what we're talking about today would be the Harris tax proposals, which, by the way, are really just adopting the Biden Treasury Green Book proposals that have been around for a few years. But the first point I would make is that all Americans, regardless of where you live, need to be concerned about this because, the taxation of unrealized gains is plainly and simply the erosion of capital. And as that capital is eroded, the harder it will be to grow your savings into retirement. So, this, in and of itself, is nothing more and nothing less than an attack on people's ability to save responsible for retirement. But Jim, when you add the application of this to Americans abroad, well, not only does it erode their ability to save for retirement, but it almost certainly, in most countries, creates double taxation. Why? Because let's take an example of somebody who, has a retirement portfolio of, say, $100,000. Let's say it grows good year, 10%. Value goes up to 110,000. Well, under these rules, that American abroad would have to pay a tax of $10,000, a tax on $10,000. And, I don't know where they get the money. Maybe they have the money sitting there, or worse yet, maybe they actually have to cash in part of their savings to do it. But the point is that it's an erosion of capital for everybody. But for Americans abroad, it's far worse because when they do sell it, or if they don't actually sell it at the same time, they're going to be taxed by the country they live in as well, right? So, I mean,
Right.
for Americans abroad, because of the citizenship taxation regime, the best case scenario is like it will be for all Americans a direct attack on their ability to responsibly save for retirement and be self sufficient. That's the best case scenario. But the more likely scenario, subject to any individual tax treaties, is pure double taxation.
It is, and you already have a situation where a lot of countries have regimes and programs in place to facilitate people saving for retirement in a tax-free way. Whereas, and in many of those countries where people are encouraged to save in this way, save tax-free, for retirement, makes all the sense in the world. In a lot of these countries, the IRS doesn't recognize the tax-free nature of those accounts. So you already have situations where the IRS deems taxable certain types of accounts where in those local countries people are encouraged to save tax-free. You already have that situation in place. Now, if you go taxing uh, 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 accumulated unrealized gains on top of that, you've got yet again another layer of taxation. How's anybody supposed to save for retirement? John, it's a crazy proposal, and once again, it's a situation where Americans living abroad are going to get hit harder than people living in the U.S.
Absolutely, Jim. And there's no question this is yet one more example of the general principle that not only, unlike anybody else in the world, are American citizens taxed when they don't live in the United States, but I think this conversation demonstrates they're actually taxed far more punitively, aren't they?
For sure, for sure, and you know, it just underscores the only solution to this whole problem. You have once again the unintended consequence that the American living abroad pursuing our version of the American dream, which happens to be found outside the borders of the U.S. That the American living abroad is going to get hit harder than anybody else. Sure, that may not be the intention of the law, but that's what happens over and over again. And the only solution to this is just do what every other country does, and get rid of citizenship-based taxation and go to a residency-based taxation scheme where you separate citizenship and tax residency. It's the only solution, John, isn't it?
That is absolutely severing citizenship from tax residency is the only proposal solution that helps all people all the time under all
Yeah.
circumstances. And,
Eh,
people need to support our proposal.
Totally agree, John. Thanks very much.
Thank you.